Welcome to IPO This Week, where we talk about companies going public each and every week. And today we have 14 companies we're going to cover, so this is a busy one. Like most of October has been, there really isn't a big name on the list, but there are some companies in some interesting industries you might want to be aware of. Before we jump into it, I want to welcome and thank the community for coming back to the channel and to let you know that later in the video, I'm going to share some plans for upcoming videos, so stay tuned for that. And for anyone checking out the channel for the first time, my name is Kevin, and I want to welcome you to IPO This Week, which is our weekly show where I pull information from a variety of resources to try and save you time by giving you the most important information for companies that are coming out, as well as the upcoming lockup expirations and notable quiet periods ending. So really this show is meant to be more of an introduction to the companies, just so you know that they're out there and some of the main things to be aware of. And then, based on the companies with the most popularity and interest from you in the comments, and sometimes just because of my own interest, we do more separate and dedicated videos that provide a more in-depth analysis into those companies. So if this sounds good to you, I hope you consider subscribing to the channel. And now with 14 companies to talk about this week, and my goal to keep this video short and sweet, let's get to it. First up, let's start on the auto insurance sector with Root, who has a very easy ticker to remember, ROOT. The company was founded to utilize car data through mobile-based telematics technology to adjust car insurance pricing based on the driver's personal driving habits, which is something that, while makes sense, also makes some people uncomfortable. Root is currently licensed to provide insurance in 36 states and is active in 30 of them, and they do have a goal to be licensed in all 50 states by early 2021. Total revenue jumped fivefold from fiscal year 2018 to 2019, and while losses have decreased, the company continues to be unprofitable. Root looks to be priced within a proposed range of $22 to $25, with trading expected on Wednesday. Staying in the insurance industry, next we have MediaAlpha, symbol MAX. This is a company that provides an automated digital ad buying platform for insurance carriers. They generate fee revenue for each customer referral, whether or not that referral leads to a sale. MediaAlpha counts 15 of the top 20 largest auto insurance carriers as partners on this platform. The company is showing strong revenue growth within a growing market opportunity. However, according to NASDAQ, insiders are selling on the IPO after receiving a $106 million debt-funded distribution last month. The company looks to be priced within a proposed range of $18 to $20, with trading expected on Wednesday. Next up is a U.S. producer of silver and other precious metals, Gatos Silver, symbol GATO. This company is focused on the production, development, and exploration of silver, as well as other precious metals. As per their filing, the price of silver rallied strongly to multi-year highs in September 2020. And as of September 30th, the price of silver has increased 31% compared to the year-end 2019 price. The recent silver price appreciation is believed to have been driven by monetary policy, aggressive stimulus measures, and accelerating investment demand in the midst of the pandemic, as well as disrupted production and a recovery in industrial consumption. These factors have enhanced silver's appeal to investors seeking a hedge against inflation, a decrease in the value of the US dollar, and general economic and geopolitical uncertainty. The company is currently concentrated on the production and continued development of the Cerro Los Gatos mine in Mexico. The company is unprofitable, with net losses tripling from fiscal years ending December 31st, 2018 to 2019. The company looks to be priced within a proposed range of $7 to $9, with trading expected on Wednesday. Jumping into the medical side of things, we have Biodesix, ticker BDSX, who provides diagnostic tests and services for lung diseases. The company provides data-driven diagnostic solutions to discover, develop, and commercialize solutions for clinically unmet needs, again with a primary focus in lung disease. The company's operations have been impacted by the pandemic, with revenue and gross margin falling in the first half of 2020. Biodesix looks to be priced within a proposed range of $17 to $19, with trading also expected on Wednesday. Moving on, we have another company focusing on the lungs with Galecto, ticker GLTO, a phase 2 biotech developing therapeutics for pulmonary fibrosis and related diseases. The proceeds of the IPO are for further developing its pipeline, including its lead candidate, which is for the treatment of severe fibrotic lung diseases, including pulmonary fibrosis. The company has conducted a phase 2A trial in 21 pulmonary fibrosis patients and has initiated a phase 2B trial with another 450 patients, with top-line results expected in 2022. Galecto looks to be priced within a proposed range of $14 to $16, with trading expected on Thursday. Next we have Mavenir, ticker symbol MVNR. This company provides a suite of cloud-native software applications for network functionality of wireless service providers. The company was taken private in 2019, but now looks to go public again with its IPO to have the proceeds to pay off debt to its controlling private equity controlling shareholder. Mavenir looks to benefit from the upgrading of technologies, particularly the adoption of 5G. The company is reporting increasing revenue and decreasing net losses, and also reports to having 17 of the 20 largest wireless service providers in the world as customers. The company looks to be priced within a proposed range of $20 to $24, with trading expected on Thursday. Now let's dive into a pool supplies retailer named Leslie's, ticker LESL. The company, who has been around since 1963, is the largest direct-to-consumer brand in the nearly $11 billion U.S. pool and spa care industry, with 934 retail locations across the U.S. The company offers in-store testing, on-site installation and repair, equipment, parts and accessories, and chemicals. According to TheStreet.com, the company says it has a dominant market share of 15% with a physical network that is larger than the sum of their 20 largest competitors. Leslie's saw revenue growth accelerate strongly as the pandemic drove consumer demand across the pool and spa industry. Leslie's price looks to be priced within a proposed range of $14 to $16, with trading also expected on Thursday. Now let's move into the mortgage industry next with two companies. The first is AmeriHome, ticker AHM. The company acquires mortgages through both purchasing them through correspondent mortgage providers, as well as through originating them directly from consumers seeking mortgage loans. Additionally, the company also services the mortgages. AmeriHome's platform is developed to be flexible and scalable, which has helped the company produce strong growth in performance with 21 consecutive quarters of profitability and production volume growth of 187% from 2015 to the last 12 months ending in the second quarter of this year, as cited by Renaissance Capital. Now, recent growth has been strongly impacted positively by the drop in interest rates to record lows caused by the pandemic, which has led to a high amount of refinancings. You do have to consider uncertainty where the housing market goes into the upcoming year, as well as if most refinancing of mortgages have already occurred. The company looks to be priced within a proposed range of $16 to $18, with trading expected on Thursday. And then we have the larger of the week's two residential mortgage lenders, Caliber Home Loans, ticker HOMS. Caliber focuses directly on the purchase market and is the second largest independent mortgage originator based on purchase volume since 2016. While revenue declined in fiscal year 2019, revenue more than doubled in the first half of this year, resulting in the company turning profitable. Like AmeriHome, they benefited from the drop in interest rates, leading to more loans and those origination fees that come with them. But going forward, they will have to deal with the uncertainty in the housing market in the short term that I just mentioned. And of course, there's the competition, not only with AmeriHome, but with companies such as Guild Holdings, who we talked about last week, and Rocket Companies, who also IPO'd this year. Caliber looks to be priced within a proposed range of $14 to $16, with trading also expected on Thursday. Next, we have Allegro MicroSystems, ticker ALGM, who is a leading global designer, developer, manufacturer, and marketer of sensor integrated circuits, or ICs, and application-specific analog power ICs for the automotive industrial markets. Their sensor ICs enable measurement of motion, speed, and position, while its power ICs include high temperature and high voltage capabilities. And more recently, Allegro has acquired technologies that provide what it calls eye-safe distance measurement and 3D imaging solutions capabilities. As to financials, while margins have improved, revenue declined in both 2019 and in the first half of this year. However, the company does believe its total available market will grow at a compound annual growth rate of 8% from 2020 to 2024. Allegro looks to be priced within a proposed range of $12 to $14, with trading expected on Thursday. A company that I'll just mention quickly is Israel-based G Medical Innovations, ticker GMVD, a company that provides app-connected medical devices for monitoring vital signs. As per NASDAQ, the company generated just $2 million in revenue in the first half of the year and is highly unprofitable with a minus 26% gross margin. The company looks to be priced within a proposed range of $5 to $7 and looks to start trading on Friday. Next, we have another biotech on the calendar, Inhibikase Therapeutics, ticker IKT, which focuses on treatments for Parkinson's disease and other related neurodevelopmental disorders. Its lead candidate is being developed for Parkinson's and its associated conditions. The company has filed 2 investigational new drug applications, one for the treatment of Parkinson's disease itself, while the second is for treatment of gastrointestinal complications that arise as early symptoms of Parkinson's. The company expects to begin the first dosing of Parkinson's patients following the IPO, so they have yet to begin stage 1 trials. As of this time, the company has no products on the market, meaning there is no significant revenue to speak of. Inhibikase looks to be priced within a proposed range of $10 to $12, with trading expected on Friday. And now onto the biggest deal of the week, Lufax, ticker symbol LU, who plans to raise $2.2 billion at a $30.5 billion market cap. The company's aim is to create the ability for consumers in China to obtain loans and wealth management services through an online portal. Their focus is on meeting the demand for personal lending among small business owners and salaried workers. According to a 2018 market research report by China Daily cited on The Street, the consumer finance market in China is projected to reach $1.6 trillion by the end of 2020, representing a forecasted compound annual growth rate of 18%. Lufax has demonstrated growth in the revenue and cash flow generation, but is also reporting decreasing operating margins. The company looks to be priced within a proposed range of $11.50 to $13.15, with trading expected on Friday. While not on the spreadsheet, I also want to quickly mention medical test developer GBS, with ticker symbol also GBS. The company was founded to develop saliva-based tests for diabetes management. However, with the pandemic, the company is now using its resources to develop rapid tests for the virus. While pandemic-related stocks have driven interest, you may want to keep in mind that the company has no products on the market and thus no revenue to report. And by switching focus to the pandemic, they're going to find themselves in a competitive marketplace with companies with much deeper pockets. As of this recording, the company looks to be priced within a proposed range of $16 to $18, with trading to begin on Thursday. So that's the list of companies that we have for this week. Again, no popular names, but some that could still turn out to be good ones to invest in. Because I'm not sure there will be much interest in seeing a more in-depth analysis of any of these companies coming out this week, what I'm planning to do for weeks like this is to revisit some of the more popular companies that have recently come out with an IPO that we covered on the channel and see how they have performed up to this point and where they could be heading. I'm not going to tell you the first one I'm going to do yet because A, I don't want to spoil the surprise, and B, because I'm not sure which one I'll do yet. And really, if I knew, I would definitely spoil the surprise. So anyway, that's some upcoming videos you can look forward to seeing soon. Let's move on to the lockup expiration dates. This week continues a slow month of companies with lockups expiring, as we only have IPO Therapeutics, whose locked up shares will be expiring on Wednesday. And then for notable quiet periods ending, on Monday we have Boki Holding, Chin Data Group, Yala Group, Asana, Mission Produce, Palantir, and Palmanex. And then on Tuesday, we have Academy Sports. And with our agenda complete, please like the video if you enjoyed it and share with your friends or also on any of your social media sites. And if you're new to the channel or just an occasional visitor, we'd love to have you join the community. It's totally free, you just gotta press that red subscribe button. And with that, I wish you a good week of trading. Thank you for watching, and until next time, have a great day.